This is our Forex blog for February 24th, 2011. And like what we do most days, we want to see which currencies' longer-term trends are weak. Those are the three colored bars underneath the real-time strength or weakness. And the dollar's weak. And last night, it was extremely weak. You wanted to trade one of the stronger pairs against it. Last night, for a little bit, the Swiss was very strong up until about 9. Let's see what other pairs were strong. Well, we'll start with going over it in real time today. It had about a 2-hour counter trend move after being weak for so long. That's typically what happens. After a currency's weak 6 to 12 hours, it'll become strong for 1 to 3 hours. Then when you see the weakness come back, you want to trade it against one of the weaker pair or one of the stronger pairs, which last night probably would have been the pound at 3 o'clock here, the euro, and of course the Swiss. So when this started getting weak again at 3:30, you could look for dollar Swiss sells. You know, weak dollar, strong Swiss. Let's take a look at that one first. You can see last night this market the trend was down. It also did a pullback up to the previous day's low, which is oftentimes a resistance area. It's a phenomenal place. When a trend breaks underneath the previous day's low and comes back up and touches it, usually price continues. So this was a really high probability area to look for a sell in the dollar Swiss last night. If you use the 50 tick chart with our FX Scalper Pro real-time momentum tool, let's scroll back and find this chart here. You can see that the real-time strength really appeared to be lessening right here. When it broke down, you want to go short. And usually when you're trading with the direction of the longer term trend, if you sold this and the longer term trend was up, you know, usually you're going to expect a 10 or 15 pip scalp like profit. But when you're trading with the longer term trend, the best way to handle that is when it goes down and kind of consolidates, you want to lower your stop here. Every time it makes a new low and kind of has a pullback and starts to go lower, move your stop down. And after a first, decent sized move of 20 to 30 pips or so, draw your fibs on that. And usually at the fib target is where your the trend trade is going to end. So you draw your fibs on there, and if it kind of runs out of steam right here, that's a good place to get out. Whether you got out at the first touch here or gave it a little bit more time and got out maybe when it went over these bars high here at 72, you're short this up there near the whole number, and you're out at 72 for almost a 30 pip profit on that trade. Just as an added reminder or lesson of why previous days high and low are such good support resistance, one of the currencies that fell a lot earlier today was the pound dollar, and it rallied back up, found resistance here at the previous day's low. You'll find that over and over again. When currencies are above the previous day's high, a lot of times they pull back, and if they can't go underneath previous day's high, they'll go back up. So looking back at the currency meter, again, the pound was very strong, weak dollar around 330. So earlier tonight, hold on a second, I have this scroll back to the wrong day. Totally take that back, because I leave these up for multiple days in a row. That's the 24th. I was looking at the wrong day. Obviously, the pound had incredible weakness last night. The weekly trend shifted down at 4, and between the two top pairs that most of us trade against, the yen was strong. The weekly trend was up, and the real-time momentum was up. It's 230 here when the pound got really weak. The pound yen would have been a better one to sell. And you can see at 230 right here, this just fell off a cliff, fell about 100 pips. Here's one of my Fibonacci profit target levels, which oftentimes is the end of the move, especially when it's underneath the lower containment band. But you can see extreme weakness. If the currency wasn't down so much, so far underneath the lower band, you might have been looking for sells here and here. The farther underneath the band it is, the less odds of it going lower, unless it goes sideways for a couple hours. This monthly R2 support level, once hit 2 times, when it finally broke down there, that trend's very likely to continue. And you can see by that time the band kind of caught up with the price over the last 6 or 7 hours. And usually when price is underneath the lower band, you want to draw a fib off of the last swing down, even if it's a tiny one, because there's less of a profit potential underneath the band there. So usually, most of the time, the first or second fib target is the end of the move. I probably would have got out of this somewhere around 71 here as it went sideways. But you would have been short on this pullback trade around 43, or if you wanted to wait for the low to get broken, that's fine too. Short at 12, out at 74 for about a 40 pip profit. Now the CAD was a lot of strength today, and so was the Swiss. The Swiss, unlike the CAD, had a weekly and monthly trend that's up. So you could have also sold the pound Swiss. You can see extreme weakness here. This currency fell last night with a lot of momentum, kind of went sideways here. And again, another perfect example of how once a support level, like the previous day's low, gets broken, tends to act as resistance on the way back up. Notice on the way back up it doesn't have that much momentum. If you wanted to wait for a little bit of sideways consolidation for 15 minutes, when it breaks down you go short with your stop just a few pips above the high here. And you can see this fell a little bit over 100 pips in less than an hour. Extreme weakness. This pullback trade right here is pretty close to the lower band, so anytime you have extreme real-time weakness, the daily, weekly, monthly trends weak, you draw your trend line on the way up. When that gets broken, you go short again. And again, like I've always said, underneath the lower band, you're not as much likely to have lower lows being made. So when it comes down and finds support at the previous swing low, you might want to get out of your trade here as it starts to go back up here at 80. So that trade's about a 30 pip profit. First one over 100 pips, and the other one 20, about 20 or so. 30 pips actually, sorry. Now if this had gone up a little bit more a little later, we would have had an Elliott two-wave pullback. I haven't been going over that in class as much. I haven't seen too many of them. Actually, it is an Elliott two-wave pullback. The trend's extremely strong down, and it rallied up, pulled back, rallied up again, touched the 1.318. I prefer it when it works its way up to the 1.618. It's a pretty high probability place to go short. And again, the market came down to the previous swing low. I probably would have just got out here at 50. But that's a nice 70 pip drop in the pound Swiss. Using the currency meter to trade the ones that are most likely to move. If one's super strong on all time frames, real time, daily, weekly, monthly, and the other one's weak, you get these kind of big moves. Now earlier today, the Australian was weak here. The weekly and monthly trend were down. The yen was strong. So until about 3:30 or 4, you could have been looking for Australian yen sells. And you can see this one was trending down yesterday, rallied back up, found resistance at the 50-day moving average here, hourly moving average. And anytime you see false breakouts out of narrow range patterns, that's usually a good sign the trend's going to reverse. And so when it comes back down and breaks this low here, you might go short, and it just takes off. If you missed that trade, you had a nice 2-hour sideways range here. Anytime currencies go sideways for an hour or two, usually it's a pretty low risk trade, especially when you're trading in the direction of the trend. And you have a Fibonacci level down here. It's underneath the lower band. Monthly R2 pivot. So you draw your fibs on there, and most of the time the market's going to stall around the first or second fib target. Don't get greedy. If it shoots through the first fib target, that's fine. Hold on to the second one. If it stalls here, get out. If it shoots through there, the first sign underneath the 1.618 that it starts to go back up, you want to get out of the trade. So you might have got out somewhere around 82. If you sold up here earlier at 70, you got about 90 pips. If you sold this one right here, you got about 40 pips. Now notice if you had sold this when it came back up to the previous day's low, it didn't come back down. The real-time momentum was strong here, and get out with a small loss.